And we have a lot of real estate service providers out here, brokers and so forth, and the question might be to help them figure out how they can help you. And the question is, what other investment plans do you have in Milwaukee, or are your investments more of a one-off? A couple of you have existing other investments, but a couple of you, this is your first real dive into Milwaukee. Chris, we'll start with you. What other plans do you have in the area?
So right now we're blocking and tackling and trying to make sure, you know, we hit our yield on our $47 million project. However, as I stated before, we're trying to put out a lot of money, and we have, you know, we've been in Milwaukee for a short period of time, but so far it's successful. We would have no issue investing more in Milwaukee if opportunity arises. To date, we don't have the opportunity, but we are always looking for it. So if there's any of those brokers out there that think they have the opportunity that I was discussing before, please contact me.
But be more specific. You're looking at larger placement of dollars in retail. Is that correct?
Yeah. So I want deals that are usually $20 million and up. I'm looking for deals that are there's a value add component. So quite frankly, that means there's vacancy. The internal saying that we have is it's broke but can be fixed. There's a lot of things broke that can't be fixed. Our internal saying is broke but can be fixed, that we can use our national relationships and our expertise to create yield. We need some credit in the deal. In our Midtown Center, we had Walmart and Pick and Save. Those are the largest income producers at the property, and those are obviously great credit. So we're looking for some vacancy with credit tenants there and deals of size.
Great, thanks. Scott, you're already in the market some, but what are you looking for?
Well, we're looking for, we do have a intention of expanding our Milwaukee portfolio. We have about 750,000, 600,000 square feet, something like that currently. We'd be looking in the value-added space and in the stabilized core space. We have pockets of money to partner with on both of those. Our transaction size is probably smaller than perhaps some others. We believe that transaction size is an aspect of our risk mitigation relative to a particular transaction. So we're looking for probably things in the $15 to $30 million range. If it's a group of buildings, we would be higher than that. But I'd reiterate that that's part of our risk mitigation strategy, is the size of the bets that we make in a particular property in a particular market.
Great, thanks. Matt?
We've made an effort for the last few years to try to buy office buildings, creative office buildings in the Third Ward, so far unsuccessfully. We've come close a few times, but we're looking for value add or core plus type opportunities with loft office buildings or historic type downtown office buildings, and I've been out in the market offering on those and met a lot of you guys doing that. And I think that we'll get a few of these done and start to build a portfolio here.
Great, thanks.
Yeah, we'd be very pleased to double down here in Milwaukee. I'm pleased to say since February, which is the date of our acquisition here, we are now only one lease away from effectively being 100% leased. So this has been one of the best success stories we've had over our 20-something years of being in business. The business plan just was completely right down the fairway, and we hit all of our marks. So we're 114,000 square feet away from really achieving stabilization. We have a full-time employee here, a property manager, and I think she'd be willing to take on more properties here too.
Andrew, I think you have your next headline for the next publication of the BizTimes right there. Richard?
Well, I'm not going to say my plate is full, but I would say it's pretty full right now. We have a pipeline probably that is going to take us out at least 5 years in terms of development going forward. And so we'll continue to look for opportunities, but we're going to be focused primarily on executing on the sites we've been working on. I just want to add, there's probably a lot of $15 million pick and save centers last week that this week are now worth $20 million. So you probably get started on that.
Great. Thanks, guys. So when you come in and you buy a property, you put your income pro formas together and your development and your value add pro formas together and such. My question, starting with Scott on the end, how has your pro forma differed from expectations, or how have expectations not been or been met? What positive surprises have you seen? So I'm only looking for positive surprises, if any, since you've purchased the property. How has anything positive come out of that makes your pro forma maybe better than otherwise?
Let's see, on the Brookfield Waukesha properties, we bought those at very high occupancy, and we've had fewer tenant defections than we originally projected. We've been able to retain more tenants than I think we originally projected, being a little more conservative in the projection department. So that would be a positive surprise. And the cost of transactions, lease transaction in office properties specifically, as many of you probably know, the concessions that are considered market here in Milwaukee are considerably less than we experience in Chicago. And we pro forma'd higher deal expenses, which we think we have beaten generally across the board, specifically in tenant improvement allowances, somewhat in rent abatement periods, but specifically in tenant improvements, where what we would consider from Chicago background to be a kind of an average market tenant improvement package has turned out to be really considered high in the market, and we haven't had to do that. On the downtown property, we're just into the major repositioning on that, but I think the major positive surprise, which we were hoping for, frankly, but we've seen a tremendous amount of leasing activity and leasing interest in the property, probably more than we originally anticipated.
Great, thanks, Scott. Matt, I don't know if you have anything, given the newness of the acquisition, but do you have anything to add?
I would say if anyone has any ideas on how to pro forma a 1 million square foot building that's encumbered by the U.S. government potentially for 25 more years that I want to develop now, let me know. Come up to me afterwards, but yeah, we're still working on it.
Great, thanks. Let's go on.
Well, as I said a couple of minutes ago, we hit our marks a lot sooner than we ever anticipated to reach effectively stabilization. And we've gotten better rents than we anticipated. We've actually either leased or renewed 550,000 square feet in just 10 months. And the other positive development, we had one of the buildings in the portfolio was very problematic. It was ill-designed, and we actually sold that much sooner than we expected to a user and got a much higher price than we underwrote.
We are excited to find that construction costs are up. Why are we happy about that? Because in Milwaukee, construction costs are only up, they are not up ridiculously. And in other major markets, it's absolutely incredible how rapidly construction costs are rising. And fortunately, in this market, we're up a little, so that's good.
Great, thanks. Chris, anything to add?
Yeah, for us, it was tenant demand. You know, we're in Midtown, we're in a lower income, diverse demographic, and we play in that sandbox in a lot of different markets, in Baltimore, in Jacksonville, Florida, and we're pretty good in those environments where a lot of you know, our competitors are not. And you know, tenant demand is usually all over the board. You know, in Midtown Center, we were able to bring in a small tenant of Route 21, but that's a 1,000-store chain, and this was their first, one of their first ventures into a demographic as we have, to use it as a test. And normally when people are doing that, they're going to places like the Bronx or Southside Chicago and much more dense and even a little bit higher incomes than places like that. So for them to take a shot on us when they're doing this new concept in Milwaukee, I think speaks volumes and was a good surprise for us.
Great. So when I was when I set this question up, what I was really looking for are these just little incremental things that the panelists will talk about, or were they the bigger things? And I heard the big things. I heard fewer rollovers. I heard fewer concessions. I heard fewer TIs. I heard a lease-up happen faster than expected. I heard a better sale on the resale of one of the assets, as well as better costing on a relative basis. Those were some pretty big and important things. So thank you, panelists, for sharing.